Welcome to Explaining Financial Results to Non-Financial Managers. This course is all about effectively communicating with non-accountants. My name is Carl Heinz. I'll be your presenter today, and I'm the author of this course. I'm a CPA in Leawood, Kansas, and basically have spent most of my professional career working with small and medium-sized businesses in preparing and working with financial statements. This course is copyrighted 2016 by the Small Business Research Institute. Let's talk about our learning objectives today. Well, we're going to try to identify the 6 most common misconceptions and misunderstandings about accounting data that non-financial managers have. We'll also try to discover how feedback and assessment loops can be used to gauge the level of audience comprehension, and we'll discuss the 7 best ways to overcome communications barriers with non-analytical personality types. We'll also explore how to use the techniques of effective communication in various scenarios. Well, there's going to be some limitations on our expectations here. We're not covering how to prepare financial statements. We assume you know how to do that. And we're not going to delve into the details of financial analysis, because again, that's a whole subject for another course. Well, the audience for this course is those who prepare and present financial information, including CPAs, accountants, controllers, those that are involved in the preparation and presentation of the financial information. Ready? Let's get started. Well, businesses face a crisis in information. To a large degree, accounting information is misunderstood and misapplied. Financials are routinely ignored, and there's a false reliance on a few statistics. Recently, there's been a focus on metrics and simplified KPIs, and as a result, there's a real problem out there in getting the information that needs to be communicated to non-financial managers in their hands and understood by them. In fact, it's estimated that CFOs lose half their audience's attention before they even start their presentation. In fact, one study showed that 85% of the managers don't understand the financial reports they receive. So what's causing these problems? Well, to a large degree, it's a lack of knowledge of the subject on the part of the people that are listening to it. Or also we could say it's a disdain for detail. And then there's this 4-minute attention span that a lot of people seem to have nowadays. They want instant answers, and they don't have the analytic abilities. And of course, there's always the fear of the unknown. Well, this is the result of a lot of common misconceptions and misunderstandings about accountants, about us. So let's talk about those common misconceptions and misunderstandings. Well, first of all, it's the whole idea that accountants deal in esoteric complexities and that no one but them can understand. Little joke. What's the definition of an accountant? Someone who solves a problem you didn't know you had in a way you don't understand. A corollary to that is that accountants have the solutions to financial problems. Well, you know, we may see what's going on, but we may not understand why. Another misunderstanding is the difference between an accountant, a bookkeeper, a CPA, and we all are looked at as some sort of policeman. You remember the old joke. How do you tell when the chief accountant is getting soft? When he actually listens to marketing before saying no? You know, the problem is that non-financial types, non-analytics, really don't have any idea of what we do. And so there's a misunderstanding between what we do in terms of controlling financial information and regulation. The other misunderstanding is that accountants are boring, dull types with no personality. In fact, there was a 2001 study, it's a little old, but it's still pretty relevant, where accountants were believed by non-accountants to be less imaginative and to have difficulty with change, and they wanted to rely upon established norms. These are how the non-financial types are viewing us accountants. There's also the misunderstanding that accountants and accounting are rigid. Well, wait a minute, we're just trying to follow the rules. We're also seen as overly conservative. Well, people are striving to avoid surprises, and conservative approaches do that. We're also seen to be math whizzes. Well, wait a minute. Aside from that 4-function adding machine, I don't think I've used calculus in the last 20 years. And then we talk about this whole idea of accounting being the language of business. Well, for many of our audience, people who are non-financial types, it might as well be Urdu, hieroglyphics, or Sanskrit. I mean, I have to ask the question, where were these people during Accounting 101? So just why is accounting so difficult? Well, it's perceived as dry and repetitive, and really, when you get down to it, it requires a different mindset. And for many people, that's counterintuitive. Well, you know the old story about you go to the bank, you get a credit, but then you make a debit. You know, the problem is, to get accounting, it necessitates time and concentration. It really is the antithesis of have it now. And then, of course, there's this problem of the stereotype of the accounting personality. But really, when it gets down to it, people are intimidated by accountants, and they dislike that which intimidates them. These common misconceptions are not only about accountants, but about accounting. You know, they think that accounting information is precise and complete, that profits are equal to cash, or that assets minus liabilities is equal to net worth, that somehow is the same as market value. And then this whole idea about GAAP, that it's the only right way to present things. And we know that that's not the truth. Sometimes other presentations are more valuable. We know that all assets and liabilities aren't on the balance sheet, and yet many of our audience will believe they are. In other words, many people who look at financial statements think they're complete. Well, you know that there's a lot of things that aren't on financial statements. Things like goodwill or the value of things that are happening in the future. You can't measure things if you don't know where to look, and very oftentimes we don't provide information that might be helpful because they don't ask for it. Well, this whole thing is, there's bottom line, there's a failure to communicate. And despite our wonderful tools to present things, we're really on the wrong wavelength. In fact, the audience is turned off before we even begin. Well, next, let's talk about what we can do to overcome this failure to communicate problem.